Nio stock news today. Cathie Wood finally confirmed $100 Nio. Well, all the Nio stockholders want the stock to increase like anything and hoping it happens soon. Cathie Wood, who chose Nio over Tesla, is now claiming that Nio will hit $100 soon. Can you believe it? And are all the Nio buyers happy? Or do you not believe it so much? Welcome back to Stock Market News, you all. As we all know, Cathie is a great investor and invests in what she thinks will be a booming business. Now, if you're all interested in the happenings in the stock market, you came to the right place. So let's get into our video ASAP. Let's first rewind back to April, where Ark Investment Management, which is led by Cathie Wood and has built significant stakes in global EV leader Tesla Inc., has been piling up shares in local rivals XPeng Inc. and BYD Company, and has purchased shares in the U.S.-listed Chinese electric vehicle Nio Inc. This is a first for the popular investment firm, which has bought shares in the U.S.-listed Chinese electric vehicle Nio. In April, it was estimated that 420,057 shares of Nio were worth $8.36 million, and Ark Invest took advantage of a decrease in the price to purchase those shares. Shares of Nio stock finished trading down by 9.4% at $19.90. The price of the stock has decreased by 40.5% so far this year. William Li, founder and CEO of Nio, an electric vehicle manufacturer based in Shanghai, China, told investors on Friday that the company aims to become profitable for the full year in 2024 and that it will more than double its spending on research and development this year in order to focus on new product development. Nio reported a loss of 16 cents per share on an adjusted basis for the 3 months that ended on December 31st. The company's sales for those 3 months were worth $1.5 billion. According to Benzinga Pro, the general consensus among industry analysts predicted a loss of 21 cents per share on revenues of $1.53 billion. Nio projected that it will supply between 25,000 and 26,000 automobiles in the first quarter of 2018. The electric car manufacturer announced 9,652 deliveries in January and 6,131 deliveries in February, despite sluggish sales over the Chinese New Year and a production pause for facility upgrades. In January, the company delivered 9,652 vehicles. Additionally, the investment business situated in St. Petersburg, Florida, saw some success in making money off the shares of the corporation run by Elon Musk. Tesla was the recipient of Ark Investment's sale of 149,977 shares, which brought in an anticipated revenue of $147.5 million. Following the opening of the company's Giga Berlin location for customer service, Tesla's stock price increased, causing the company's market cap to once again surpass $1 trillion. A bull on Tesla shares, Wood has predicted in the past that she believes the company's share price will reach $3,000 by the year 2025. Then on Friday, Tesla shares ended the day with a loss of 0.3%, trading at $1,010.60 per share. Prior to trading on Friday, Ark Invest had 1.71 million shares of Tesla, which had a combined value of $1.73 billion. In addition, Wood's company acquired more than 80,000 shares of BYD, which is headquartered in Shenzhen, China, and is supported by Warren Buffett, the chairman of Berkshire Hathaway Incorporated. The estimated value of these shares is $4.36 million. BYD, which began as a manufacturer of batteries, has moved swiftly to expand its lineup of electric vehicles. When Nio, XPeng, and Li Auto were added together, BYD had more sales of electric vehicles in February than the three of them together. Prior to the start of trading on Friday, Ark invested a total of 331,334 shares of BYD and 928,648 shares of XPeng, which were each assessed to have a value of $19 million and $27.2 million, respectively. Nio still finished the month of June with solid gains of 24.9%, according to data provided by S&P Global Market Intelligence, despite the fall in the stock markets and criticism from a short seller who accused Nio of manipulating its numbers in the previous month. Nio stock has been able to maintain its momentum in July so far, following a dramatic decline from the beginning of this year through May. This was supported by the launch of a new product, as well as significant plans for the near future. When Nio disclosed its delivery statistics for the month of May on the 1st of June, it allayed the concerns of investors who had been anticipating a slowdown in the rate of growth. Nio's deliveries increased by just 5% year over year, but they increased by 38% sequentially, demonstrating a resurgence in production after the company was forced to cease operations due to COVID-19 lockdowns in China. After falling by 11% during the course of the previous week, share prices increased by 3.8% today on the stock market to reach $22.84. The price of Nio stock increased by 25% in June, bringing it back above its 50-day moving average, but it is still trading at a 60% discount to its 52-week high. The zero-COVID policy of China was put to the test once more on Tuesday, when many newspapers reported a new outbreak of COVID-19 in the eastern part of the province of Anhui. Nio automobiles are built in Anhui's Hefei. In addition to this, the business announced that it would host an online Nio Power Day on July 6th. An update on the company's electric vehicle battery strategy and its battery leasing business is anticipated. Nio also revealed that it surpassed 10 million battery exchange services and 998 battery swap locations across the world. It had previously mentioned that it intends to begin production of its own battery packs around the year 2024. Nio, Li Auto, and Xpeng are all growing their operations in China in an effort to compete with Tesla. According to the International Energy Agency, sales of electric vehicles throughout the world in 2021 more than quadrupled from the previous year, with China serving as the driving force. The International Energy Agency predicted that battery supply chains and EV manufacturing capacity will need to expand at a high rate in order for this explosive rise in sales to continue beyond 2022. However, Nio and its competitors are experiencing a lengthy scarcity of semiconductors as well as impending shortages of batteries. Nio is a pioneer in the battery industry with its unique subscription model. In practice, Nio does not sell the automobile together with the battery. Users have the option to purchase Nio EVs without batteries at a reduced cost and rent batteries for an additional fee on a monthly basis. They are also able to switch automobile batteries according to their requirements. Nio has more than 5 million battery swaps to its name and claims a total of 884 battery swap stations in China. It has begun offering battery swaps in Norway, increasing the company's competition with Tesla in that market. In 2021 itself, Cathie Wood, in an interview with Yahoo Finance, said Chinese officials are tightening their grip on high-margin enterprises in order to achieve the shared prosperity goals set forth by the Communist Party. She explained that China's goal is to reduce the profit margins of these businesses in order to expand access to the products and services they offer. This would be accomplished through the promotion of shared prosperity. So we're looking for really low-margin enterprises, which is not what we generally seek for, said Wood. However, we are interested in companies that will enhance access for transportation. After worries about debt and liquidity caused shares to drop, Nio's financial health gradually is becoming better from a fundamental standpoint. It has reduced losses while simultaneously achieving substantial improvements in income. The introduction of new electric automobiles and continued globalization both suggest that there is greater room for growth, and the electric vehicle battles are picking up considerable steam. That concludes today's video. Hey, please remember that this channel is not intended to provide financial advice, and we do not advise you to invest in any company. This is the approach for bringing instructional content to your door. With that in mind, we do urge you to please perform considerable research on the issue before you purchase anything. Thank you for taking the time to watch our video, and for the latest information, please like and subscribe to our channel, and we'll see you shortly in the next one.